Yesterday, we had Oracle report its earnings, and it was a smash hit, with the stock up almost 14% here today alone, hitting $200 per share and hitting a fresh all-time high. And in this video, we're going to talk about what Oracle earnings tell us about the rest of the market, specifically the tech side of things. We'll also talk about some of its competitors, which may be trading higher here today alongside Oracle. And we'll also be talking about some other exciting names that I'm watching, such as Fortnite, Palo Alto, CrowdStrike. These are some of the cybersecurity names in the tech side of things. And of course, the semiconductor trade, which has been red hot recently, taking a look at stocks like Nvidia, Taiwan Semi, AMD, and of course the ETF that tracks the group, SMH. As we get started with this video, all I ask is that you hit the thumbs up button. It does help me out with my little channel here I'm starting for stocks, and I would greatly appreciate if you subscribe if you're new and enjoy what I have to offer. Let's jump into the Oracle earnings first. So I built this cool little report that helps me to track the earnings report and just showcase visually some of the stats about the report. So specifically what we can see here is that the EPS, or earnings per share, actual number came in at 1.7. compared to a forecasted 1.64. This was a nice sizable beat in terms of earnings expectations versus what actually came out. And in case you don't know much about Oracle, Oracle is a huge software company in the S&P 500. It offers a wide range of products, primarily focusing on database software, cloud computing, and enterprise applications. Think of some common competitors being things like Salesforce and Microsoft. They offer a fleet of tools for businesses and an entire kind of universe of useful tech features. On the technical side, we saw a huge gap up here following the earnings announcement, and from the lows of yesterday to the jump up here, you can see we have at one point up almost 15% on the day. A pretty incredible move here for a single day move. And this was a gap that just led us right past the previous all-time high around $196 per share. Momentum looks incredible for this stock, but I personally do think that this puts it into a little bit of an overbought status. If you were a buyer during all of the craziness before this, you may have been able to get this stock on sale, but currently I would definitely say this stock is definitely now trading at a premium, and deservedly so, with really strong earnings numbers. So the question is Oracle a buy, and are there any other stocks that we could look at that are in the similar space that may be a buy in sympathy to this move? Well, from a technical basis, while I think Oracle is a wonderful company, I would love to own some shares, I definitely think I need to wait for a pullback before I can get involved. If we see the stock pull back into, let's say, the 150s to 160 range, that definitely looks like a more attractive entry point for a bigger, longer term buy on the stock for me personally. But I would love to add this to my portfolio, but we'll have to wait patiently to see if we get a pullback. That being said, it's very possible oftentimes after a big earnings report like this, we do see a stock go back to fill the gap that it left through its earnings report. So I'll see if we do get a big retracement down here. I may look at this area a little closer, around 175 here as a starting position point, but definitely would be more interested in loading the boat if we saw a retracement back to the 150s. Oracle stock rallies to record highs after bullish cloud outlook. While the earnings report was great, there was also some demand here for AI, which of course is all the rave these days. And oftentimes when you get a big reported earnings for a particular stock, many of its competitors will actually trade in tandem. For example, let's just say, for example, you saw Coca-Cola reported really poor earnings. Pepsi, who also plays in the same playground, may be expected to actually have bad earnings as well. These two things kind of move together. Well, the same thing can be said for major competitors, for example, of something like Oracle, which would be Microsoft, right? Microsoft also offers a fleet of resources, and this to businesses specifically. And this stock is absolutely on fire. Now, Microsoft is an incredible company, but in recent years, it's not been a super impressive performer. I just pulled up a weekly chart on Microsoft, and you can see really for the better half of a year, the stock has not really gone anywhere. That is until now, where we see the stock exploding through the highs. As I think during all of this craziness, people are looking for companies that are large enough and produce consistent revenues and earnings, or a value stock, but at the same time offer some growth opportunities. The beauty of Microsoft is I think you get both. You get earnings growth, and you of course get the value stock component as well. Now, if you've been watching my videos recently, you know I've been critical about Apple stock. On the contrary, I think Microsoft is a good example of a company that is actually growing its revenues pretty consistently and deserves the premium that the stock trades at. Microsoft has recently been consistently beating its Microsoft, when we look at our earnings report tracker here, has consistently beat its earnings per share estimates. And just look at this income statement. It is such a consistent revenue and net income grower. And with those profit margins in the high 30s, this is an incredibly attractive stock. However, one thing that is challenging on the Microsoft stock price is, of course, the high valuation. The PE ratio in the 30s makes it a little bit of a hard one to buy for me because, again, while these numbers are so incredible, it's also valued for incredible numbers. And this is where sometimes in the stock market, it is rare to find you get an example of a really great growing company that's trading at a valuation that is reasonable. Right now, I would say Microsoft deserves to be expensive, but it is also still expensive. That puts me in a position where I am definitely an interested share buyer of Microsoft, but would have to wait for prices to come down and for that PE ratio to cool off just a little bit. Now, one challenge when it comes to tech stocks in general, like Microsoft and Oracle and all the other names that you can think of that are big tech names, is they're typically valued expensive because they have very consistent and steady earnings growth and they have so much growth potential. Another very popular stock in the tech space that I find to be a really interesting one is CrowdStrike and its competitors, things like Fortnite. This is a stock that I do personally own and think has plenty of upside from here. Fortnite has also been consistently beating its earnings per share estimates and also shows very consistent revenue growth and earnings growth with nice high margins on the business. And while the PE ratio is still in the 40s now, I bought it when it was a little bit lower than this, but when, now sitting in the 40s, while this is still expensive, we could compare this to, for example, a CrowdStrike. And here is the challenge with CrowdStrike is it's all over the place. It reported a net loss here, but before then it was trading with a PE ratio of 665. Now the challenge with a CrowdStrike, for example, is that this company does some accounting tricks to not showcase where a lot of the money is being reinvested right into the business at this time, so they're not showing a huge amount of net income. However, to CrowdStrike's credit, take a look at the very strong and steady growth in terms of their net revenue. But cybersecurity is a part of the market that I'm very bullish on and do think that while the stocks are expensive, I think that they are expensive for a good reason. Think about for a second, even if we go into a time in which maybe government spending continues to, or more efforts to contract government spending go into place, and companies have to cut back perhaps due to a recession. Let's just take a look at that example for a second and ask ourselves, are companies going to really discontinue massive amounts of cybersecurity spending in an age where AI is getting better and better every single day, where hackers and all sorts of infiltrations on the internet are becoming more and more present, both on the individual level, the company level, and even the country level, right? We have cyber attacks all over the place. So if there's one place that I think is a very stable revenue growth area in the tech world, it to me would be companies like Fortnite, CrowdStrike, Palo Alto, right? We could pull up Palo Alto as well, that ticker symbol PANW, and talk about how these companies, I think, still have stable earnings and revenue growth simply because of their persistent need in a world that is constantly evolving AI-wise. So when it comes to cybersecurity stocks, it is one of the parts of the market that I like the most. It's in tech, which I think has lots of growth, but it's sort of value tech in the sense that it is a need for companies to spend on, not at all a want. If we take a look at Palo Alto, you can see this too is seeing consistent revenue growth here, and it is offering a profit margin here of around 11%. However, the PE ratio on this one is also very expensive, and part of the reason why I just feel the most comfortable having some Fortnite in my own portfolio. Speaking of very high valued companies, let's talk a little bit about the Elon Musk and Trump drama. So just a little bit of an update on this one. Elon Musk Musk says that his comments of Trump went too far. Elon Musk predictably says, and this is an interesting little thing from MSNBC, Elon Musk predictably says he regrets some posts about Trump. Elon Musk called Trump before conveying his regret for some of his posts, and Reuters saying that Musk backtracks on Trump criticism after White House outreach. Is the Trump-Musk spat really over? Well, that's the question that shareholders who are watching the Tesla share price are definitely thinking about at this moment. And we do see a nice bounce back in the share price of Tesla. Now, if you watch my recent video on Tesla, I did choose to do something in particular with my Tesla shares. Back in the April sell-off, I chose to pick up 400 shares of Tesla, which ended up being a very good trade for me. However, with the recent drama between Elon Musk and Trump, I did choose to sell 2 calls against half of my position out until July 11th. If I get called away from the shares, I will take that as a great, trade on 200 shares of Tesla, and I will keep the remaining 200 shares as well. At the same time, if the share price just stays flat or comes down, I will keep the full 400 shares here. I do want to continue to stay invested in Tesla, but at this point, it has become too big of a position in my portfolio, given the very large risks associated with Elon Musk these days. I mean, he's really become even more controversial than I've ever known him to be. And I've owned the stock for, 5 years or so back and forth, or off and on. I've owned the stock, sold the stock, played options on it many different times. So I continue to hold the shares, but at this point, the position size is pretty big, and I'm doing some pruning or some risk management here on my position by cutting it back a little bit through the use of covered calls. So I'm collecting premium in the meantime for selling these calls and continue to hold the shares. Also, just because I mentioned Fortnite, I'll just pull up Fortnite for a second. So here is my Fortnite position. I do own 400 shares of Fortnite, but do not personally at this time have plans to sell calls against this one. I like the positioning that I have in this stock and do see plenty of upside for this in the coming years. Another stock that I own that I wanted to talk about while we're talking tech stocks is, of course, NVIDIA. NVIDIA is nearing its all-time high. We're not too far away at this point, around 6 to 7% from reaching a fresh all-time high on this stock. And I wanted to talk a little bit about what I'm planning to do with this. So I own a good bit of shares. In fact, we'll pull it back up on my broker. So if I pull up NVDA, I do own some shares in NVIDIA. But the thing with this stock is that it is rare to get a big discount on the stock. And so I did take advantage of the sell-off that we saw back in March. I added some more shares to my holding and in April. And so my current average position is at $111.31 per share. That is my average share price, and I own 500 shares. It is a good size position for me, and if it does rip through the highs, what I may choose to do is similar to my Tesla position, look to sell some calls against perhaps one half, or in this case, since I could do up to 5 contracts, I might do 2 out of my 5 contracts that I could possibly do selling calls against my position. So sitting here looking pretty good on NVIDIA. Also wanted to talk about a very popular other company that has had a really, doesn't look like it, but an incredible bounce back here of a 58% rally from the lows. This is AMD, a very popular name in the semiconductors world, which is bouncing back here sharply. This one, to me personally, I'd rather just be in NVIDIA rather than AMD, but I know there is a strong case here recently. A lot of people really like the idea of getting long things like AMD. If I pull up SMH, this is the ETF that tracks semiconductors across the board. Semiconductors got absolutely trashed in all of this stuff, and I took the opportunity to buy NVIDIA, but congrats to anybody who took this opportunity to pick up semiconductors across the board, whether it was SMH, AMD, NVIDIA, or another company that I really like, which is Taiwan Semiconductor. Take a look at Taiwan Semi. This thing is absolutely ripping from the lows, up 60% plus from those April lows. And I wanted to take a look at the Taiwan Semiconductor kind of financials report that we could do here. You can see, again, steady revenue growth and earnings and 43% profit margins. This company makes substantial amounts of money. And similar to NVIDIA, they have more of a supply problem than a demand problem. There's so many customers that want what they have, and yet they can't even keep up with demand. That's a great problem to have in terms of a business. And to me, Taiwan Semi is a stock I would love to buy if I can get another dip in the market. If there's a dip, this is probably one I'd be looking to add shares to. The PE, actually, let's see if we can take take a look at our earnings tracker here for Taiwan Semi, just see how things have been going. And you can see pretty much consistently outperforming their estimated earnings here recently by a sizable amount in Q3 of 2024 and pretty consistently in the last 4 quarters. So that is a really good signal here. When we take a look at Taiwan Semi in terms of a PE ratio, though, stock's very expensive, but had a bit of a dip in April. This is when we traded down to $166 per share. This is obviously hindsight speaking, but my goodness, was that a steal at 160 or less. That was a really great opportunity to buy the stock. Truly, obviously wished I had shoulda, coulda, woulda bought some Taiwan Semi, spread it out between Nvidia, but still happy to have caught my Nvidia shares when I did. But this is another company that remains on my watch list. I would love to be a buyer of Taiwan Semi if we got another correction in the market or a pullback. This would probably be top of list for me. By the way, if you'd like to explore the tool that I'm using here, it's called the Stock Box, and there's information for it down below in the description. And if you do want to get a copy, you can use the promo code YTVIP to get a nice discount on the tool. Check it out down below in the description. You can also join our free Telegram channel, and I would encourage you to subscribe if you're new to this channel, where I'll be covering more stocks. Let me know down below if there's a stock that you would like me to cover next. Thanks for watching.